Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to Steven Cooklin, CEO of Manolete, the UK's #1 insolvency litigation funder. So welcome, Steven.
Hi, Paul. Good to see you.
Yeah, well, a lot's been happening since we last spoke back in, I think it was November at the interims. And it does seem as though the Omicron variant has delayed the return to office work and also sort of like the insolvency practitioners. Can you quickly take us through how that sort of impacted sort of like short-term trading in Q4 for Manolete?
Absolutely. So what we've seen, what we've heard from all the IPs that we talked to, the lawyers that we talked to, is, as you will have seen, there was a very strong rise for the last 9 months now of what's called creditor voluntary liquidations, which is by far the biggest aspect of the market. So those have been pre-pandemic now for levels for 9 months now. Now, what's happened with the IPs is two hits really. Number one, because they were operating for the best part of 2 years with this group, huge suppression of the insolvency market by the government, they laid off a lot of staff. If not fully, then certainly temporarily. And then secondly, you had the Omicron effect. So what we've been told throughout the market and throughout the country, with all the people that we've got stationed out there, is that the IPs have struggled to just lock these cases onto their systems, let alone do the investigation work, which then leads to the case referrals to Manolete. So things were looking very bright around the November time that we spoke. We've just come off the back of October and November inquiry numbers being really, again, for us, pre-pandemic level, 50 in September, 55 in October. When Omicron hit in November, December, those went down into the 40s again. So back to really that kind of lower level that we'd seen during lockdown. And that continued in January and February, which was disappointing. What's been fascinating is that the last week of March, rather too little too late, unfortunately, for our results, but last week of March, those absolutely spiked up, so 15 in a week. And in the first week of April, 21 in the first week of April. So again, if you turn those April numbers with a bit of discounting, let's say, that's more 60, 70 inquiries, that's record numbers for Manolete, absolutely record. And that is a harbinger of then much higher signed up cases, much higher unrealized revenues, which then turn into realized revenues. And now you see cash coming through. And that's really the important part of this announcement that we've made today, is that really it's the final piece of the jigsaw, I would hope, for the investor community, because what I've just described there in a very short-term horizon, you've really seen is the story of Manolete since the IPO. So we listed at the end of 2019. We spent a year building up our infrastructure across the UK, lots of in-house lawyers. The next year, 2020, you saw us buying a lot of cases, a lot of unrealized revenue, unrealized profit, which of course people rightly question, well, could we complete these? Could we turn it into cash? Then next year you saw those turning into realized profits, which was about 80% of the profits were realized, only 20% unrealized. And then this year you've seen all that cash start to fly in, £15.6 million. Then just after the year end, another £10 million, which are really quite eye-watering numbers, because our share of that, ignoring the big case that we closed off the year end, our overheads are only running at about £6.5 million cash a year. So when we're bringing in net cash of, as we've got here, 9.7 million, then add in the cash for April, another 6 million on top of that, you're starting to see the cash delivery that we've been hoping to show, of course, for this business to investors.
And can you just quickly remind investors of what your sort of sweet spot is of the cases and that sort of like the timeline for, as in like how long does it take to basically, when you sign a particular or buy a particular case and then realize it into cash, just as a sort of rough rule, and also the value, just so really just to sort of like, what's your sweet spot, what's the sort of timeline, and what's the sort of value?
Yes. So sweet spot size-wise, which is really quite typical of the UK insolvency market, would be about a headline claim value of about £300,000-400,000, which are probably going to settle pretty quickly within 11 months for about half that, 200,000.
So that's agreeing the actual amount of money, but you've not
legally
collected
binding agreement with the director or with the PLC that you're suing or with whoever you're suing within 11 months. And in the world of litigation, that's very, very fast indeed. You look at our kind of peer group who are funders rather than buyers of litigation. Their average is closer to 3 years, particularly with the slowdown with COVID. So very, very much quicker. Then it takes on average about another year to get the cash in. Why? Because the director, usually our suing director, he would probably have 60, 70, 80,000 pounds that he can release very quickly. He then has got to kind of pay his way through for the rest of the agreement over the next, £5,000 a month, £10,000 a month, what have you. So that's why the cash profile looks the way it does. But there's no further costs accruing once we're just literally collecting the money. As you've seen on the announcement this morning, this big case that we've settled for £9.5 million, we will receive every penny of that within 25 days. So that will take our net debt quite dramatically down from 10.3 million at September down to I think
6.5. Yeah, excellent. Okay, so just putting aside the large case, which we'll come back to in a moment, just in terms of sort of like that sweet spot, you sort of do you make sure when you do diligence before you actually buy it that the person who you're going to come after has actually got some money? So somebody like I don't know, Boris Becker, who's been in the news, who got done, he's got a shed load of money, and apparently he's been hiding assets to the insolvency guys.
Yeah, that's right. So when the case first comes in, it goes to a completely separate team called the net worth team, which is 3 non-lawyers who look to profile the asset base of who we are looking to sue. And unless it gets the green flag coming out of the net worth report team, our lawyers don't even get to look at the papers. We just send a very polite note saying, purely on the basis of recoverability, Mr. IP, Mrs. IP, I'm afraid we won't be able to take this case forward.
Right. And then just returning to sort of like the big case, etc. Have you got any other large ones on your books at all, or is that sort of a one-off?
We've got the trucks. I think it's one that sticks out is the truck cartel case. We've got 22 of those as we've got on record, and actually is in the public market. Our 2 biggest elements of that are the CityLink claims and the Comet claims. So pretty big numbers. And these we've always separately disclosed, but what's interesting there is that 2 trials are going to take place in May, so next month, BT and Royal Mail. And what the judge has done is stayed all other cases. We haven't even issued our claim yet. We'll be issuing it in the next few weeks. So what the judge is saying is that he really wants, he's very clear that the read across from BT and Royal Mail will be very applicable to all these many other, the Road Haulage Association, which is being backed by, I think, Therium, Burford, I think, are backing a whole load of cases. The liability's been established, so we're waiting for the judge to put numbers on the amount. So that has always been a different set of cases, but we're rather hoping that judgment on that is likely to be out September, October this year. There's a possibility we'll be going immediately into settlement negotiations, subject to appeals, of course, if that is the case. But I must say, from where we're sitting, it seems that both the claimants, defendants, and the judiciary are quite keen to see this done very efficiently, because otherwise costs, spiral out of control, and the whole thing becomes something of a nonsense for everybody involved.
Well, if you're right in terms of sort of like, we've obviously had the last 2 years and we've had that artificial suppression by the government from all of their sort of their creditor protection measures for CVLs. Now, if we're right in terms of we've just been pushing them to the right, i.e. they're deferred and not cancelled cases, which seems to be the reason that Boris Becker's case has come to court right at the end. But if that's correct, then how are you going to go about prioritising the work? Because you've only got so many sort of, of expertise in-house. Are you going to cherry pick?
Of course, cherry pick, and just put some numbers on that. I think the ONS last week put out some fascinating statistics. They're thinking insolvencies could rise to 250,000 a year against the norm of 20,000.
Crikey.
Yeah, so it's one of the big, I think accountants Yage quoted that number. So that's just to give the scale of the opportunity for Manolete. So everyone in the industry, and I think the way the government's done it is very, very clever. They did the first wave of relaxations on the insolvency laws in October, 1st of October. The second level, which are all the property creditors, which are pretty voracious appetite for getting their rent back now, of course, that didn't, they only got back to normal insolvency powers on their tenants on the last day of our financial year, which again wasn't helpful as far as our numbers are concerned, but we're kind of back to normal now. So taking those ONS numbers, the fact we are back to normal insolvency rules from the very first day of this new FY, yes, so even though we have almost quadrupled the size of our legal team, in-house legal team, there's clearly, if it's anything like what we're seeing in April and the end of March already, we will have to be more picky on the cases that we choose. We are already picky. We reject 70% of the case, 70 to 75% of the cases. During COVID, that rejection rate went up higher, actually, to 75%. So I suspect it'll come back down to more like kind of between 70 and 80, and maybe we'll have to go a little bit higher if we are constrained on bandwidth. I don't think capital will be constrained, it's only bandwidth.
And you'll be looking basically to turn those around quick, won't you? That'll be the sort of one of the key sort of differentiators, I imagine. If you can get a return on it fairly rapidly, then that'll be sort of head of the.
And the IPs will want that as well. The creditors will want that as well. You know, there's a lot of concern on inflation, supply chain issues. Even horrible wars in Ukraine, etc. I think a bird in the hand, the cash in the hand now for the IPs and the creditors is worth 2 or 3 possible birds in the hand in a year's time, 2 years' time. And just be careful with that analogy.
Exactly. We're just talking of sort of like albatrosses and eagles here.
Yeah.
It's actually a bit of a double sort of like whammy, isn't it? I.e., such that not only have you got an increase in sort of like insolvencies going forward, and you've got that backlog, but actually, because you're the third-party funder of it, you're going to be used, presumably, as a sort of like a spillover resource, because the IPs just can't handle it. So not only do they want to sort of like reduce their risk by selling the cases to you guys, which is what's been happening, because you still have relatively small, that funding model is still relatively small, I understand.
Right.
That should accelerate that transition to the funded model. Is that right?
Absolutely. And in fact, even the insolvency service of the government's doing a lot more insolvency work, acting as the liquidator itself. So just last week, we got 8 cases in 1 week from the insolvency service, let alone your FRPs and your BEGBs and your Grant Thorntons. So I think everyone's constrained. Everyone's very risk averse. I think we've proven over the last 12 years operating in the market that we deliver fast cash results. So even though a claim might be for several millions, actually, realistically, the director that hasn't got that amount of money, let's do a deal. For the director, that's good. They can start up their new business and employ new people, and the GDP is fueled by that kind of thing. But let's deal with the old problems that happened before. So I think it's the right moment for this model, and I think the stars are really quite beautifully aligned for the next 3, 4, 5 years for Manolete.
Wow. And you've got plenty of cash, as you say. You've had strong cash generation, but you've also got that sort of £25 million RCF, haven't you, with HSBC?
10 million on top of that, so 35 actually, because we've got a accordion facility to draw down another if we ever need it. But I hope people will look at the full numbers when they see them in June and really fully appreciate now that the strong cash generation that's coming off this model. We've got 260 live cases as we speak today that are completing every day of the week and paying faster and faster. So no, we're at a good moment.
Yeah. Well, I would just point investors to have a look at the sort of the broker notes, which could put out. But I would say sort of like just my own personal sort of investor view of valuation. I mean, I could not see any reason why this business can't deliver sort of 13 to 15 million of EBIT in the next 2 or 3 years, given that. And it actually might fly past it. But let's just assume that that's a modest level. Using a 13, 15 times sort of valuation, you get a theoretical price range of £3.80 to £5 per share versus £2.35, I think, this morning. So,
well, let's remember we were at 10 million EBIT even before before the whole COVID thing hit. So actually getting to kind of 14, 15 was the normal trajectory. So I think those are fair numbers.
Yeah, good. Okay, well, look forward in touching base in June, and hopefully, actually by then you'll have sort of like 3 months more further trending, and we'll be able to get a sort of better handle on how 2022 is going to look.
Spot on. Yeah.
Brilliant. All right. Thanks very much.
Great to see you,
Cheers,
mate.
Stephen. Thanks. Bye.